Well, hello everybody, and welcome to the final edition for the month of November, the weekly review. We've got but a month left in the trading session. It's been a tough year, but we've managed to make money on the year, so not all is not lost. Last week, the markets performed pretty well. I mean, if you look across the board, the Russell finally picks up, starts seeing the rotation that we expect that should happen here into the end of the year and into the Fed meeting. And they're almost even on the year. NASDAQ, of course, still the big winner here at 8.3%. So overall, you can't argue with the performance. It was a tough year for the markets, a big drop in August, September, but then, of course, a big rally after that. If we look at the quick review here, rotation in the small caps, that's what we're talking about here with the Russell. So you see a nice big push up on the Russell, starting with this low. Now it's a little stretched. It just got over the swing point high. It's a little stretched at this point. If you look at it on a weekly, it doesn't look that bad. As a matter of fact, on the weekly, it's attempting to set up an ABCD structure to the upside on this time frame. So I'm looking, it looks like it goes from here to there and back up. And so that would take you up, towards these highs. And I suspect, if this market continues to perform, that's probably exactly what we're going to see take place. We got some rotation in some of those beaten down groups like XLE, XLB, XLP. I run some queries each week to see what sectors are doing the best. These had the rotation last week. The small caps we just talked about broke out. Europe breaking higher. This was something that was unexpected on my part. Now, if you remember last week, we were talking about, this was going to come back to a retest regen off this breakout. So you broke out here, right? Then you come back, you retest into the area, right? And then you regenerate back out of it. That's nothing but positive. You got a lot of central bank action this week, in particular in Europe, right off the bat here this week. This looks like it can stretch up into this area. Maybe it's going to stretch up there on that European news. Whatever the case, the DAX looking pretty strong. And if we look over at the CAC, there we can see it's hanging right at the highs, attacking the swing point high. They've got two of them up here above it. If we look at it on a weekly basis, you can see it's right here at the breakdown bar, which is what the DAX was messing with and finally got over. So positive in Europe. Of course, it's all based on Draghi. Draghi speaks on Thursday, reveals what the ECB is going to do. That's going to be the big event this week from a economic standpoint. And, of course, that's going to move markets. It's going to move currencies, potentially move everything. If we turn our attention to, the more concerning things, you got the geopolitical issues, you got the dollar continuing to inch higher. But overall, the most important thing is that these markets continue to look bullish across the board. And you're going to hear me echo that over and over as we go through the presentation today. What are the technical positives? That breakout we just talked about, the index is holding their gains last week, no give back. You got some ABCD structure starting to form now. And in some cases, they're just potential. So if we look at the S&P 500, for example, you've got this potential little ABCD structure performing here to take it back over this high and potentially over, or actually up towards the highs from previous trading, and in particular get over this swing point or this breakdown bars high. And so this is a positive. You've got potential ABCD structures here on the weeklies. Everywhere you look, as long as this thing holds up and tries to push higher, right, you're going to have some big structures start to play out. And there's that one on the S&P. As far as those that are already playing out, you already have the NASDAQ, the composite, right, starting to push higher. It's already over the little B point, pushing up. It's going to try to get over these tops and then push up to a brand new high, on the longer term time frame here. and come test that high that was out there, 52.31, try to get over it. Again, ABCD structures here potentially if it starts to move higher. Everywhere you look, things are starting to fit together just as you would want. Again, Europe moving higher. The negatives, if you look at them, is this dollar strength, right? It's eating at the emerging markets. The easiest way to see that is in the EEM. You can see this thing is struggling. If you put it on a weekly, you can see it came back up, didn't even get to the retest regens on the bearish side, and can't really move higher. It's struggling to move higher, hasn't been able to fulfill its projections. So if I'm looking here, for example, you had a projection here, didn't quite get to it, almost got to it. You have the possibility of another one, trying to form here to take it up and do a full retest regen. And I suspect if we're going to see continued movement higher, what we're going to see is we're going to see the dollar come down some. We're going to see off the Draghi action this Thursday. We're going to see the euro push up. That's going to put pressure on the European markets, but they can probably handle it now. You can see that the equity markets in the U.S. continue to work higher on a dollar that begins to fade, and you're going to see these emerging markets pick back up, right, and see some money come back into them to keep them from causing a real problem on the downside. So, I think so much revolves around what the banks do, the central banks. It's always been that way. It continues to be that way. But that, to me, would be the scenario that you'd want to see develop here if we're going to continue to just simply grind higher in these markets, not just in the U.S., but around the world. Dollar strength, commodities, we've talked about that. But again, if the dollar gets weak, you'll see the rotation into like XLE, XLB, into the various industrial metals in the XLB, even into the precious metals like gold. So that to me is probably the biggest event this week with the ECB to see what happens there. Fundamentally, as I was just talking about, you got all these central bankers coming up. You've got the Australian, the Indian, and the European banks this week. The Bank of England the following week, and then the Fed and the Bank of Japan the week after that. So over the next 3 weeks, 6 of the largest central banks are going to make their decisions. And of course, China just makes theirs whenever, and so there may be action out of them. On the negative side, if you got this continued deflation and this muddle economics that's going on, and you got all these geopolitical issues, everywhere. And now it's Russia and Turkey with the shoot down of the plane in the prior week. So a lot on the fundamental side, both positive and negative. What would I be watching for? We had that last week, we had that favorable Thanksgiving week. Markets did work higher and got that rotation that we were looking for into the to the Russell. The NASDAQ keeps grinding up, right? It's hard to argue against it. It is doing what it needs to do. And the S&P still is trying to get over that breakdown bar. That, of course, here is on the weekly. That number is 2103.47. It's trading at 2090, so you got to get up about 14, 15 points to get over it. I think the biggest event this week is the ECB. And does the dollar stop going up? That scenario I just outlined with the ECB, I think that's going to have a big effect this week. You can see the dollar breaking out of this little congestion area, and just slowly trying to grind higher. But it's struggling, and it's struggling in front of the ECB. It's had little consolidations push, little consolidation trying to push again. If you look at it on the weekly, it actually can go higher and can grind up into here, and maybe you're going to get some sort of spike off the ECB. But the dollar, you don't want to see it start breaking out yet because it's going to put too much pressure on too many sectors and world economies, in particular the emerging markets. So if you want to see the market move higher, you want to see the dollar quit going up. So that's going to be a big event this week off the ECB, and then that breakdown bar on the S&P 500. I think this is key. Once we see this, right, once that breaks over it, then we know the new highs are coming, and that, to me, is the last big straw, right, the last big confirmation that needs to happen. On the economics and earnings, of course, the ECB, you got Yellen speaking the day before. I didn't look to see what that is for, but that's kind of curious. It's the day before the ECB. And you got all kinds of data, beginning of the month, all the flash PMIs, the employment numbers, and so forth. So it's a week packed full of data and central bank action, and I think that's going to be the big event. As far as the bottom line here, let's just go over these real quickly. Everything that has to develop to get to new highs at the end of the year, it just continues to do so. You got the rotation in the small caps. You got the inkling of rotation now to those beaten up sectors like XLE, XLB. If the European Central Bank does what it's supposed to do, we don't have a huge surprise out of Draghi with massive intervention, then I suspect we're going to see more rotation into those groups. The NASDAQ is reaching towards those new highs. That was a key. You had the NDX get over the highs. Now the NASDAQ should be the next one. S&P should get over the breakdown bar to signal it's going to new highs, and you get the Russell rotating money into it. All those things are taking place. The European markets are hanging at the highs or making new highs. Asia hasn't completely melted down in any way, even with the dollar strength. And the dollar, even though it's inching up, it's still range bound on that weekly. And as long as it stays that way, I think these markets can continue to grind higher. And if the dollar looks like it's going to stay that way, in other words, it comes back a bit, then I think you can see the rotation back into Asia to beef up what is probably the most struggling part in the world. The big picture is technically positive, even though the world's got all these problems, all these geopolitical issues, the ISIS situation, the Russian situation with Turkey now. I mean, everywhere you look, there's problems, but there's always problems, right? There's even more if you look elsewhere out of geopolitical. There's flattening yield curves due to what the Fed's going to do this month. You got the stress taking place in the corporate debt structure. I mean, look at some of these charts. I mean, here's the high yield corporate bonds. I mean, these are not healthy charts. They can't lift, right? There's a lot of stress in all the debt structures around the world. And if you go over to like Europe, you got debt, huge amounts of debt trading negative rates. That's not a healthy situation. You got the geopolitical everywhere we've talked about. You get the Fed embarking on the rate increases and on and on and on. But you know what? It doesn't matter. It just doesn't matter until the market says it does. And right now, technically, the market wants to go higher. And as long as it wants to go higher, we have to respect it and we have to try to run with it. On the portfolios, I put a lot of notes in here. I'm trying to shorten these and not give you so much, length. So you can read about most of these. I put a lot of detail in here. There's ABCD structures, for example, and some of the recent ones we've gone into. We're going to want to take some profits in that euro before the ECB meeting. I'm going to try to do that probably tomorrow. We've got the oil that has the potential to move off an OPEC meeting on Friday. There's a lot happening, a lot of details in here that you can look at. There's nothing in particular I want to point out and look at it in terms of the charts. But right now, we're heavily invested. We want to try to stay that way. We want to keep taking profits and rotating that money just like we did on some of the moves over the last couple of weeks. And just keep working into things that are strong and trying to make moves. And, as we get into the end of the year, we'll have to decide what does it mean. Because we could have another tough January, come first of the year. In other words, typically what happens is you get that Santa Claus rally that kicks in. You get a move up into the Fed meeting, some consolidation maybe right at the Fed meeting or even after the Fed meeting, and then you potentially, get some gyrations off the Fed meeting middle of December, and then it typically just grinds higher on low volume into the end of the year, into the first of the year. And so if it plays out that way, we could have a weak January again. So we'll have to look at it as we get closer. But right now, stay long, stay strong is typically the way you should be viewing these things. And, as these markets, grind to the end of the year, we'll have to make our decisions about what to do next. Okay? Well, that's it for this week. As always, if there's anything I can do to help, let me know. And I'll see you next time. Thanks.